Good evening, everybody, and welcome to our Luxcess Group Market Review webinar. Guys, I trust you have all had a fantastic week, profitable week in the markets, and as always, we have some fantastic content to go through this evening. So, first of all, guys, as always, we're going to start off by reviewing the positions that we analysed last week. And then, of course, we'll take a look at last week's fundamental activity and take a look for the week ahead. So, guys, before we get started, do I have any questions? Of course, if you have any questions throughout the webinar, just pop a message into the groups and we can go through those questions before we move on. Okay, fantastic. So guys, last week we took a look at a couple of positions in the market. We looked at the Aussie dollar against Japanese yen, and we also looked at the euro dollar against the US dollar. We set a trade position over the Aussie yen, but it didn't quite meet the criteria over the euro US dollar for us to take out a position over that asset. So to get started, we have one chart to review. Going straight into the Aussie dollar Japanese yen, the position that we were looking at in the markets last week. So we saw our order triggered within the market quite promptly throughout the beginning of the week. Sorry, here we are. Quite promptly throughout the beginning of the week, we saw the prices come up to. Apologies, guys. Let me just. There we go. So we saw the price come up to our entry quite early in the week and trigger our order as we expected. We expected to see the price push up to the upside, just on more so on a profit take from last week's price movement. Of course, we had this very powerful bearish movement down below this previous support channel. We saw the roll of this support channel reverse, and it was then a resistance channel that we saw very well respected. We had some fantastic price action over here on a 4-hour rejection, and again we just came up to test those highs. So we put our stop loss just above those highs here at 79.82, and as you can see, it just came up to test those highs. Didn't quite break above, so our stop was still intact. And then we started to see the sellers come back into the markets. So what we've seen since then is, of course, we're just sat in an area of consolidation at the moment. Not very ideal for our position. I was expecting this position to meet its expectation a lot quicker than it is doing so at the moment. But nonetheless, we have a fantastic position in play. We're currently sat pretty much at our entry. 79.18 was the price limit. We triggered our entry. We had let's take it down into the hourly, because we initially had some nice price action off of the entry. It's just above at 79.30, so there was some nice Nice price action there. Here we go from this area. From triggered our entry, and initially we had a good movement to the downside, and we were put into a good bit of profit in our position. But we've we saw a retest of our stop loss. Our stop loss held, and now we're starting to see the rejection take place on a smaller time frame. So over the hourly and the 4-hourly is looking pretty bearish indeed. And then of course, guys, we take that over to the daily. Cool. Let me sort out this chart a little bit. So we take this over onto the daily, and again, we've got a pretty bearish picture there on the daily. Sellers now firmly in control. I was keeping a close eye on this on Friday, just because we did have that potential to retest that resistance area by our stop at 79.82, but as expected, the stop has held. We've seen the sellers come back into the markets, and it's painting a pretty bearish picture for the week ahead. So, guys, I'm quite happy to hold this position on the Aussie yen. I'm not looking to change this or modify this position. Our stop loss is held quite nicely. What I would like to see now is the 79.20s, that price level broken once again, and I would like to see prices coming down into that 78.80 price level, just around these levels here. So I would like to see prices break this the 79.20s where we're trading at the moment, and then coming down into this 78.80 price level, just down here, just breaking these lows, breaking these highs again, pushing down to these lows at 78.30. Then, guys, once we're in some good profit with this position, heading towards our profit target, we can look to alleviate a little bit of risk. And let's take it back down to the 4 hours. Let's expand the chart again a little bit more. There we go. So once we start to break back through this level at 78.80, and we see prices close below this level, then we may have an opportunity to look to reduce some of our risk on our sell order, on our sell position in the market. So depending on the price action, when we see the sellers come back into the market, or come back into the market this evening, Monday morning, given this recent price action, it should provide us with a new stop loss to adjust for our position, so that we can look to lower a little bit of the risk that we have on at the moment, but ultimately we keep the probability within our trade position. We don't want to lower our stop loss too soon, because if we lower our stop loss too soon and we don't have a new technical area, then ultimately, we're just saying, I'm not happy with that risk. I'm going to take, some of that risk off the table, and then our analysis that we've done becomes redundant, because we've moved our stop loss, we've changed the position. This is why we need to be patient and wait for these prices to develop, and then we can look to move our stop loss. So just come back down to entry. If you missed a trade before, guys, it's providing us with a fantastic entry into the into the trade position. So I'm going to look to hold that into the week ahead, and when we get an opportunity, I will look to move the stop loss down and reduce a bit of risk on this position. Okay, fantastic, guys. So before we move on, do we have any more questions over the Aussie dollar, Japanese yen? If you have any questions, just pop them into the box and we can go through them. If you don't have any questions, we will move on to the fundamentals. Okay, fantastic, guys. So last week was quite an active week within the markets. Fundamentally, we had quite a bit of information taking place within the markets, and we're just going to spend a little bit of time over that this evening before we take a look in the markets and look to the week ahead. We have a couple of opportunities that I want to take a look at, but let's take a look at last week's fundamentals and of course prepare ourselves for the week ahead. Okay, so starting off really from Monday morning, we had the first big potential data. Governor Carney addressing the markets, and he was due to hold a press conference in London, and he holds these press conferences in London every so often. They're not particularly, they're not weekly, they're not fortnightly or sort of bi-weekly, they're not monthly. These are scheduled as and when, and the topic can vary depending, of course, on the speech. But of course, guys, Brexit has taken the stage for the many previous speeches that Governor Carney has made, and we didn't really see anything new from Governor Carney. We didn't see anything bearish, anything detrimental. He was stating what the market already knew, that there would be uncertainties in regards to Brexit, and in the event of a no deal, there will be, essentially more uncertainties. They're not putting accurate forecasts on this. They're just they're effectively they're effectively keeping themselves quite flexible in their forecast. So what we've seen is Governor Carney come out and say, on 10 o'clock Monday morning, that although the uncertainties associated with Brexit and currently taking place, globally and especially throughout the European Union, there was some positive upsides into the British economy. And guys, this is what we were saying last week. In the run-up to that vote, there is good potential. There's good potential upside for the British pound. We were mentioning just last week, if you go to last week's recording, we were speaking about the British pound and speaking about the potential upside, the potential buying opportunities up until we, get closer to that date, that March 29th date where we leave the European Union. Although that's now potentially being extended as well. So, we're seeing again more buy opportunities coming out for the pound. But these opportunities, guys, as we mentioned last week, these aren't opportunities that we can plan on the webinar, because of course, these happen day to day. So, we need to get a WhatsApp group together, or a Facebook group together, or something where we can keep in touch day to day, just throughout just up together with the market activity, because as we expected, we've had some fantastic upside with the pound last week, but as we mentioned, it's difficult to place those positions on the webinar, because of the uncertainty with Brexit, because we're having so much data. And of course, we can't get the instructions out to you as quick, over webinar. So I think a group is definitely going to be beneficial to to the possessions that we look to place each week. So moving into Tuesday, we had further data for the pound sterling. We had inflation report hearings. Again, nothing really major reported with inflation report hearings. Wages are increasing at the moment and have been for the past 4, 5, 6 months now. Wages are increasing more than inflation. Inflation is falling back towards that 2% target, and wages at current are growing on average around 3% month on month. So we're seeing some good upside again within the pound data on the overall macro data. Into Tuesday afternoon, we had Fed Chair Governor Jerome Powell testifying to the, I believe it was the Senate committee, is it? Senate Banking Committee. We didn't really see too much there with his testimonial. Of course, we had the major scope of the data with the US dollar the previous week with the FOMC meeting minutes. So there was nothing major there. CB consumer confidence for the dollar was better than expected. We've seen a recent downturn in this data. If it gives us the history, it doesn't give us the history, but we saw some fantastic figures building up throughout 2017 into 2018, with CB consumer confidence hitting a 16-year high. And then it just took a little bit of a dive off of those 16-year highs. But now we're starting to see some positive data coming back through with consumer confidence. We're starting to see some fantastic data coming through in the labor markets with the US dollar, and even manufacturing and production with the US dollar is it's continuing to to put out strong figures. So again, this is something that we touched on as well, guys. Looking back a couple of weeks ago, we were looking at the US equities markets and their strong performance throughout January and February. And when they've gone on to have a positive January and February, they've gone on to post 15 to 20% gains throughout the month, throughout the year. So, we're seeing the data coming back into the market to support some strong growth within the equities markets, within the US economy, and ultimately showing that on the US equities markets throughout the for the year ahead. So more of this data for the US dollar, we will start to see some some good sustained movements for the year ahead. Moving into Wednesday afternoon, we had CPI data for the pound, but that was that wasn't anything major. Again, Federal Chair Governor Powell continued his testimonial to the Senate Banking Committee. Again, we didn't see anything major there. That was the content for that, came in the FOMC meeting minutes, as we mentioned for the day before. The ANZ business confidence worsened slightly for the New Zealand dollar, and it wasn't great to begin with. It's the economic outlook on the macro picture for the New Zealand dollar is quite precarious. We're not seeing any major growth estimated for the years ahead. We're seeing is quite a steady economy expected to take place, and in terms of business confidence, in terms of investment and business confidence, we're not going to see that level of confidence in an economy that's just ticking over. We're going to see that confidence and that excitement and those investment opportunities in those booming economies. And New Zealand just isn't there. So, as a result, we've seen these disappointing figures in the business confidence sector. Moving into the Aussie dollar, we had private capital expenditure quarter on quarter. This has increased fairly well off of the back of the Reserve Bank of Australia. As we mentioned, I believe again it was last week, the Reserve Bank of Australia predicted solid growth for the months ahead in terms of construction, in terms of manufacturing, and of course within the commodity sector, within the mining sector as well. And the private capital expenditure, we're starting to see, the results of those strengths within the economy. Those positives within the economy are starting to put a bit more money into the pockets of the consumers, into the pockets of private expenditure. We've seen that pick up quite nicely from the forecast, and this did put a bit of confidence into the Aussie dollar. But ultimately, on a macro picture, it still does have those worries. Although the Reserve Bank of Australia predicted those good times, the good times ahead, we are still seeing some uncertainties take place. Advanced GDP quarter on quarter for the US dollar exceeded targets quite fantastically. It's at 2.6%, beating the forecast at 2.2%. Quite a large growth in that, but ultimately still down on the previous quarter of 3.4%. Now, the US dollar and the US economy is posting some fantastic growth at the moment in comparison to the European economies. In comparison to Germany, in comparison to Spain, in comparison to France, UK. We're starting to see the US economy pulling away, once again. And again, we saw that come through with CB consumer confidence data. This hawkish data is coming back for the US dollar, and it's going to potentially present some good buying opportunities for the US dollar, and especially US equities. So moving into Friday last week, guys. Again, Fed Chair Jerome Powell was addressing the markets, and he had finished his testimonial. And this is what we were looking at last week, guys, as well. Although we see the governor of the Federal Reserve the chairman of the Federal Reserve Bank addressing the market. If we look at the description, and if we look at what he's due to talk about when he's addressing the markets, we can position ourselves better within the markets. The more information that we have, the better prepared we are. And we can see that he was just due to give a speech after accepting an honorary degree from the University of Bologna. I believe it was. Oh, sorry, no, this was slightly different. So he was due to deliver a speech about recent economic developments and longer-term challenges, but again, nonetheless, the content is similar at a Budget Commission's award dinner. It's not a very prestigious event. My apologies, guys. I got the events mixed up with a recent event that took place. But the content is essentially the same. It's an after-dinner speech. Guys, do you think the chairman of the Federal Reserve is going to release that data to the markets at an after-dinner speech? Or do you think he's going to release that data to the markets at the monetary policy meetings? Of course, guys, it's going to be the latter. So, after dinner speeches, we don't really concern ourselves with those from, central bank governors, because they're not going to release the information to the market at these events. That really sort of summed up Friday on the whole. We had ISM manufacturing data for the US dollar, just coming in just a little bit disappointing, but ultimately, consumer confidence still exceeding expectations, but the manufacturing sector just slowing down a little bit for the US dollar. And for GDP month on month for the Canadian dollar, missing its expectation, posting negative growth on the GDP month on month. Now, if this continues for the Canadian dollar, then what we're going to see, guys, is we're going to see a recession. This is what we're speaking about. Now we've seen for 2 months in a row negative figures month on month for GDP in the Canadian dollar. So that is something now to really keep an eye on for the weeks ahead. So looking to the week ahead, guys. Looking to the week ahead. First of all, before we get started, guys, do any of you have any questions about last week's content? Halfway through the webinar, we've visited last week's content. If we don't have any questions, we will move on to the week ahead. Okay, guys. As always, if you do have any questions, please don't hesitate to pop those into the group. So going into the week ahead, we have first of all Monday's fairly quiet day. We have building approvals month on month, expected to be much better than previous figures. Again, they've been fairly disappointing, but with the Reserve Bank of Australia did state they are expecting to see better construction figures and more houses built month on month. So we will start to see that data come through with the building approvals. But on the offset, it's still pretty disappointing data. This is what we were saying on the macro picture. It's fairly disappointing. So although we had that positive statement by the Bank of Australia, the Reserve Bank of Australia, the central bank for Australia, what we need to see is we need to see those positives that the governor was speaking about start to come through in terms of data releases. So tomorrow is going to be a good insight, I think, for the Aussie dollar for the week ahead. So moving into Tuesday, we have the current account data and the interest rate data for the Aussie dollar. Now, we're not expecting anything to change in terms of monetary policy. So although, we have a barrage of data there, I wouldn't expect anything major. I wouldn't expect the Australian economy to raise interest rates. I mean, guys, if they're going to change interest rates, at the moment they're going to, look to lower interest rates so that they can increase spending within the economy from a consumer side, especially. And if we see that, we will see the Aussie dollar sell off. But we're not expecting that. But if we do see an interest rate move, guys, it's not going to be to the upside. It's definitely going to be to the downside. And the reason being is we don't have that confidence there with the Australian economy. So moving into Tuesday evening, we have Governor Carney addressing the markets at 3:35. This is a very interesting time, and yeah, that's why he's due to testify before the House of Lords. Usually he testifies before the Treasury Select Committee. So now he'll have his peers within the House of Lords going and asking him the question. So it's going to be quite interesting. Again, I still feel that there's further upside for the pound sterling until the vote. I wouldn't expect to see much change there with the pound. Going in for Governor Lowe in Tuesday afternoon, he's due to deliver a speech at the Australian Financial Review's Business Summit, and we are expected to see questions from the audience as well. And he's due to deliver a speech, regarding the housing market and the economy in within Australia. And this is a big thing that again we've been speaking about, is the potential to see growth within the construction industry, within building houses within Australia. And this is what the central bank has been stating, is it sees good growth ahead. So we might see a bit more information from the Central Bank of Australia in terms of where is it getting these forecasts and these predictions from. GDP figures month on month, quarter on quarter expected for the Australian dollar. I would expect that to move the markets early hours of Monday morning, but the GDP is not looking all that positive for the Australian dollar. Moving into Wednesday, Bank of Canada rate statement. Again, we're not expected to see a change in interest rates from the central banks this week. I still think it's a little bit disappointing for the Canadian economy given its recent GDP figures. So I think there's some good potential to make a opportunity of downside Canadian dollar. So looking to sell the Canadian dollar for the week ahead. We have retail sales month-on-month data for the Australian dollar on the early hours of Thursday morning, UK time. Again, you know, my eyes are fixed towards the construction industry within Australia, looking towards building, you know, housing permits, getting the permits for constructing new houses, and ultimately manufacturing and building those new homes. So that's what I'm looking for personally with the Aussie dollar. Resale sales, not paying too much attention to that. And for the euro, we have the again main refinancing rate, again interest rate with the European Union, and we're not expecting any change there once again. You know, we've seen it now 0% for since back into 2017. We're not expected to change from those levels anytime soon. And of course, guys, it is the first Friday of the month. We have the big one. We have non-farm employment change data. Guys, this is always volatile for the US dollar for the week ahead. So please be careful when it comes to Friday. I'm not going to look to place any positions with the US dollar for the week ahead, because although we have some good opportunities intraday, you know, we can't get those opportunities over to you through the webinar because, of course, we have this data on Friday. So if we were still floating in our position, albeit in profit or in a loss, you know, there will be no way to get over to you that, you know, we'd be adjusting our position. So Friday, guys, please be careful with the Aussie, the US dollar, sorry, with non-farm payroll data or non-farm employment change data. Okay, guys, so do any of you have any questions in regards to the fundamentals there, in which we in what we just went through? Just pop a yes in the box if you do. If you don't, fantastic, and we will take a look at what for me is my main play for the week ahead. Okay. Fantastic, guys. So for me, I'm looking at an opportunity on the Canadian dollar Swiss franc, and I feel that there's some fantastic opportunities to the downside for the Canadian dollar off of the back of the you know, those negative GDP figures that we've seen for the Canadian dollar. We've seen that negative, you know, that negative growth, that contraction within GDP. So, you know, we're not seeing any growth within the Canadian economy month on month now for 2 months. We're starting to see this come back into the Canadian dollar. And from this area, from this, you know, general area, price area, from 75 to 76.50, we've seen some fantastic supply in the market over, you know, over the past half a year from this price level. More recently, in a very similar price structure as well, you know, albeit not exact to what we have at the moment, but very similar. This support channel, a breakthrough and a retest and a movement to the downside. Here we have that support channel, and now we have a breakout. And guys, I think there's a great opportunity on the CAD Swiss for a short position for the week ahead. We have, as you can see on the chart, we have some fantastic opportunity for for the week ahead. Apologies, guys. This was the support channel I was referring to, the previous support channel here. We had that breakout, that retest, the movement to the downside, and again here, we're seeing from around the same price area, that support channel, the sellers coming into the market, again that supply coming into the market and pushing prices down. What we're looking for is a retest similar to what we had before, and then we can look to to make a move to the downside on our positions. Because look, guys, we've had some fantastic opportunities from this from this price area. Here we have a head and shoulders. Apologies. There we go. Here we have a head and shoulders. The head, the left shoulder, the right shoulder. Again, we have our neckline. We've broken through our neckline. We've retested our neckline and broken to the downside. We've had a support channel. We've broken through that support channel, retested that, and headed to the downside. And again, guys, we have very similar price action taking place for the CAD Swiss. So all we have to wait for is our retest. And, then we can look to take advantage of, the position to the downside. So this is something that I am going to set up. It's not something that I'm going to get, the absolute best entry on. For me, I'm going to look to enter around 75.50. And the reason being is because we have some good support levels, some very good support levels and previous resistance areas, from this price level. And although, I want to enter up towards that 75.90 area, for me, that would be the better price. But again, I don't think, if, for example, if we were trading up towards that area, and then Monday, Tuesday, we had our rejection through a market signal, there would be no way to convey to you guys, that, I'm not taking the pending order and I'm now taking it on a market execution. So to ensure that we get picked up in our order, we're going to have to reduce our entry just a little bit. So, we're talking about 75.50 for entry into this trade position. So, we talked about our entry. We can look at the previous supply, and in terms of what to expect from from around this price level. We can see that the sellers have came in very powerfully from these price levels before, from around this price area. So we can expect, again, some of the same. We're seeing a good technical market signal unfold and take place, as we have previously from this area. So, we can look for history to repeat itself in that, in that respect. So, for me, guys, I'm going to look to start to look to place this position. There we go. So, as mentioned, I'm going to look for a sell limit from the 75.50 price level. I'm not going to push it any further up to the 75.90s, because although we could get a better price, I don't think we have the probability of getting filled on our order. So 75.50s ensures that we will get picked up in our position, We might just have to be a little bit more patient with it, but nonetheless, it's still a fantastic opportunity with, with overall a fantastic macro outlook. So what we're looking for is the sell limit at 0.7550. Our stop loss for this position, guys, we have a fantastic opportunity, fantastic price structure. So you can see the highs of this price structure that we've just broken out of. So 76.20 just puts us ever so slightly above that structure, incorporating spread into our position as well. So 76.20. It is a slightly larger stop loss than I would look for, but ultimately, we are looking to get picked up in our position at 75.50. So we may get an opportunity to reduce our risk on the position throughout the week ahead, but this is the initial framework to ensure that we get picked up in our trade position, and that it doesn't miss our entry, and ultimately that we capture the profit from this price movement. So our stop loss above 76.18 at 76.20. So in terms of our profit expectation, what are we looking at? Are we looking back down to the 72 handle, even maybe below that to 71.80, 71.50? Well, for me, I think looking initially, we have to look around these sort of areas here, and we can see initially that looking around that 73.80 price level is we're seeing some good price reactions off this area. So 73.80s is the initial area that's sticking out to me. So I would look to exit just above this price level. As we've seen historically, we've seen some fantastic demand. Some fantastic supply come into the markets from these price areas. We're expecting history to repeat itself once again. And we're not looking for the lows of this. We're not looking for a movement to back down to the lows at 71.50 or at 72. We're looking for that that 73.80 price level. So just above there, 73.75, just above that price level, towards a 74 handle. So profit targets at we'll go for that 74 handle. It is quite a few pips up from the 73.80s. There's still plenty on that position. We're talking about 150 pips expectation for about a 70 pip stop loss. And guys, I would expect that we will have an opportunity to reduce our risk on this trade position. Okay. So do I have any questions with this position? So as it stands, guys, we are, I will continue to hold Aussie dollar, Japanese yen short. And, I'm also looking to take CAD Swiss short in the markets as well. Now, bearing in mind that, we have two planned positions that could potentially see us in play within the markets. I don't want to overexpose ourselves too much for the week ahead. Okay. So I think our position on the Aussie yen, we can look to hold for the week ahead. And ultimately, this position on the CAD Swiss will see us picked up, throughout the week. And then essentially move on towards its expectation. So I don't want to overexpose ourselves too much for the week ahead. But that being said, guys, we do still have a few minutes left. So if you have any positions that you want me to take a look at for the week ahead, just pop those in the group, and we can take a look at those, and we can dissect those together as a group. If you don't, not a problem. We will wrap it up here for this week, and then of course we will regroup again next Sunday evening. We saw some initial profits from our position on the Aussie yen, and then it came back to retest our stop. Our stop has held firm. Our stop wasn't breached, and now we're back down towards our entry. So guys, this week I'm expecting not only the Aussie dollar Japanese yen to meet its expectation, but for this CAD Swiss to also bump up the profits for the week ahead. So I can take a look at Euro Pound first of all, and a quick look at gold. We have time. So I'm just going to take it away from this for the moment. So I'll give you a quick moment to take a screenshot of the chart if you would like to, before we take a look at Euro Pound. So as mentioned, I think there's still some good upside with the pound sterling, and we are going to probably see that again come through against the euro, especially. We're starting to see some buying pressure coming back into the Euro Pound, but ultimately, guys, let me take you onto the macro picture. We're seeing the lowest prices that we've seen on the Euro Pound in over a year and a half. We're talking over 2 years almost. 2 years takes us back to around this price level down here, but we're seeing not only a break in these yearly lows, we're seeing a close below these yearly lows as well, and sellers looking fairly determined for the month ahead on the Euro Pound. So again, we're starting to see on the back end of this, on this bullish pound, we are starting to see this bearish euro as well, and especially with this negative European Union data as well in regards to Italy in a recession, Germany just avoiding a recession, and again the current riots in France as well. And this is putting further pressure on Germany, the Netherlands and Spain as well. Of course, the European Union's other big parties, and Spain again is having its own troubles with unemployment. So I think there's some good downside to be had with Euro Pound. And for me, guys, that next stop is we're talking around that 84 handle. I think we could see some further downside, maybe down towards these demand levels down here towards that 80, 81 and 82 price handle. But over the next week or two, I think that 74 price handle is going to be met pretty quickly for the euro pound. So the euro pound, we have some, I think, some good opportunity for that downside. But again, guys, you know, with the pound, it's not something that we can plan in these sessions because, you know, where we are approaching that Brexit final date, we have, you know, we can see data coming out 2, 3, 4 times a day for you know, for the pound in regards to Brexit, and it's all unscheduled data as well. So, you know, there's no real safety there with us position, you know, planning a position on the pound. But I still think, guys, you know, up until that date, 29th of March, no, I still think that we're going to see some good upside with the pound. So I would say down to 84 handle, down to the 0.84 handle. And let's take a quick look at gold before the time is out for this evening. So again, you know, we saw the sellers come in very hard throughout last week, and we broke some huge levels within gold and smashed, and you know, initially straight through them. One of those levels was 12.96, a big price level within gold. 12.96. Let's just get that marked up on the charts, and we can you know, we can take a look at the significance of this price level. So I'm going to take you first back into 2017, then we can move forward through from there. So back from 2017, this 12.96 price level has been a huge price level within gold. Right throughout 2016, trading above that quite convincingly. Again, 13.08, fantastic price level within gold. 13.10. Let's move up to about 13.10. Fantastic price level within gold as well. And again, that 12.96 price level, resistance area. And we have just hammered through on Friday through 13.09 and 12.96. And for me, guys, I can't think of why we would have smashed through those levels. Understandably, gold is, you know, quite overbought on the weekly and the monthly time frames. But this is just due to, of course, the consistent bullish trend that we're seeing within gold. This is just, you know, to do with the recent bull trend. You know, up from sort of those lows that we saw at you know, around 11.80, you know, right up to back up towards, you know, 13.50. So we've seen some fantastic movement to the upside. Maybe now what we're seeing is just a correction within gold, but what has alarmed me is that we've just smashed through that 13.10 and even down to that 13.96 level, 12.96 level in, you know, literally no time at all. There was a fantastic opportunity that that we managed to take last week on gold. I want to show you guys because it was a as I say, you know, there was a brilliant opportunity with this, and it represents a fantastic strategy as well. Ooh. So as we can see, that support channel and just that retest of that roll as well, we have that rejection from that level, and then that movement to the downside. And guys, that was, you know, really the movement for last week. But unfortunately, you know, that happened right on Thursday, Friday last week, but the scale of that sell-off was what, surprised me quite a lot. I didn't expect gold to sell off that powerfully and that quickly, but yeah, for the week ahead, I don't really know what to make for gold for the week ahead. I think we need to see the price get back above that 1296. Otherwise, I think it's about 1282 is probably the next big area, and that's quite a way down. So we need to see some buying pressure coming back into gold. Otherwise, gold is definitely free to head down to those big support levels and test those big support levels. Okay, guys. I hope that answers your questions with gold and euro pound. If you have any more questions, just pop those in the box quickly before we finish up. And if you don't have any questions, guys, I will see you all again next Sunday. Okay, so fantastic, brilliant, guys, brilliant work this evening. So if we don't have any questions here, we will leave it here for this evening, and we will regroup in a week's time, next Sunday evening. We have a brilliant position planned within the Canadian dollar Swiss franc, guys. I look forward to to seeing you really all next week, and talking about the profits that we've made through the week. Fantastic, guys. Brilliant work this evening. I wish you all the best for the week ahead. Here's to a profitable week, guys. I wish you all the best. Take care and goodbye for now.